Despite RBA keeping rates on hold, there's still a fair bit of relief out there for borrowers. Now, the reason this is obviously with the current market, there's less transactions happening on market, there's less houses being bought, massive amounts of competition in the market between banks. There's plenty of borrowers, but not borrowers in the normal sense of people trying to acquire new homes. The borrowers that we are seeing is clients that are looking for better deals for what they've got. So refinancing is happening largely at the moment. And even if it's not for a refinance, it's clients looking for a better deal from their existing lenders. Earlier this year, a good home loan rate was at about 6.19%. Nowadays, that is anything under 6. So we're seeing a lot of, 5.94s and 5.99s from a large variety of lenders. In very general terms, I would think the pricing for most home loans has probably changed by about 0.2 to maybe even 0.3% with some lenders. It's important for clients to understand as their borrowing changes, what the bank is prepared to offer you also changes. So as your loan to value ratio changes, as your amount of debt changes, different deals become on offer, and it's important to review that consistently and regularly to make sure that you're getting the best deal. Quite often see, someone might get a lump sum from a redundancy or an inheritance or something like that, and as they pay that down against their home loan, they've reduced the loan to value ratio against their home, and despite them owing the bank less money, they get a better deal. Now, at the moment, there are a few lenders that have lender rebates on offer, but only for very specific set of circumstances under certain loan to value ratios and for certain loan sizes. We had one last week where a client had their home and investment property. Their total debt was 1.6 million across 2 properties. And we asked the lender, hey, we don't want just your best rate, but we also need something to help these clients cover their refinancing costs. Not only did we get the clients a good rate, but we also managed to get the bank to put in a specific refinance rebate. Double whammy. It gave the client the ability to have a better rate, but also not at any cost to them. Review your lending rate. Talk to whoever it was that originated that loan, either your current broker or current bank, to see if you can get a better deal. If there is a better deal, have a chat about what it's going to cost to move over, and then see if there is a rebate out there that could sweeten the deal. And then once you've done that analysis, if the numbers make sense, remember, don't pay a loyalty tax with a bank. Be prepared to move to a lender that has a better rate and product features and benefits that suit you and your family better.